The film for today is going to be about the AMC squeeze breakout. 2 billion more people watched shorts, which showed off the shorts and many other parts of this movie. First, let's look at this AMC stock, which already has 4.4 million shares on the loan against a $289 business. What's the big deal about shorts? We've recently seen the shares that are out there and how they're being used a lot. We've always talked about this in terms of how the synthetics and coins make shares available in the first place. In this way, they can borrow shares and then sell them short against AMC. They never seem to be able to settle down, and things keep going back and forth. That's why the shorts have been in this play for so long. That's why we said they spend billions or hundreds of millions of dollars on everything we've already talked about. Besides that, it's important to know why the biggest possible squeeze stinks have so many shares open and CTB is so low. They knew what was going to happen, so they bought as few shares of CTB as possible right before the big jump. Still, we need to remember that AMC and GME are two of very few stocks that are going through what they are. AMC and GME are the only ones who really experience this. And of course, some other stocks that have too much debt and have been sold short. The key word here is over-leveraged shorting, because they took on too much risk. Short sellers are stuck in these plays. This is why we see all the things we've talked about before, especially with AMC and GME, who obviously went through it the most. That's why this happens at the end of the day. There is a link between deception and suppression in the stock market. The more suppression you see, the more manipulation there is, and the more shorts are stuck in the play, because they're stuck in the play. We know why the value of the squeeze will be so much more than everyone thought it would be. That's also the reason short buyers don't want to pay the squeeze price. They know that each of them might have only had to pay $1,000 if they had sold the shares 4 or 5 years ago. They put in billions more dollars and made billions more synthetics, so now they have to pay $10,000, $50,000, or $100,000 per share. It's clear what scares them, which is why they always try to tag GME and AMC. It's more likely that cheating will be found if you own more AMC shares. Don't forget why you're here. Let's break this down. For those who don't know, the main reason you can still buy AMC shares is that all the shares have already been bought by regular buyers. The OBV also shows that no one has bought or sold. Now we know that the first AMC float, the one that should be there, has already been bought. Short sellers make fake AMC shares all the time to keep the price from going up, so people can still buy more shares. So when we say buy one more share, we really mean buy one more synthetic. It's important to make it clear to short sellers that they need to make another fake. All of this, and I believe this is a great example. Every share is a brick that the shorts use to keep their own jail locked up. Otherwise put, we need to know why these shorts need to spend money on fakes. What does this do now? It will be tough for short sellers to get money, as we already said. It's not going to drain all at once. We're making progress on them slowly. As we push them to make more synthetics, it's also clear that the risk will go up. In other words, the time when the squeeze will happen is getting faster. Besides that, they need to know that the price of the squeeze will go up even more if they make even more synthetics. It's because they need to buy more shares. The price will go up even more if they have to cover more shares, if they make more. That's why we said they were always stuck in this play. We've always said that this is just a race to see who will give up first, the bears or the shorts. We already knew the answer, which is why we're still here. It's clear that banks are hiding everything they can. What's going to happen? They're in really bad trouble. People who don't believe and pay attention will fall even more when they do. Check it out. Don't say you weren't told. We've been letting a lot of things slip on this medium. Recently, we've talked a lot about the market as a whole, as well as banks and other businesses. We talked about hedge funds, short buyers, and these kinds of funds in general. We can see that they are not in a good place from this point on. The swap positions that have been made are turning out to be very risky, as we've talked about. It was said that people need to raise their margin requirements because every day the chance of failing grows. We talked about how traders who are short on swaps mostly have positions with banks worth trillions of dollars. That's how the economy is shown by the market and how risky it is. Also, we should remember that the squeeze will happen even if no one leaves. First, Banks will have to pay back the loans if they are the first ones to fail. Since these hedge funds got loans, they will need to repay all the money they took out. Shorts will have to pay AMC in order to get that loan paid off. What does that do? Because of that, squeeze will happen. It works both ways. The people who sold short would also have to cover this position. AMC and GME would have to squeeze them if they went out first and failed. Now you understand why the squeeze will happen no matter who goes out first. That being said, only people who buy things in bulk can go out into this market, right? We haven't put hundreds of billions or trillions of dollars at risk yet. Not only that, but we're not taking on too much debt at 100, 200, or 300x. They're doing everything they can to hide what's going on because of this. Check out this final finance map. It's over $2 billion in short sales have grown in 6 months. The December 31st, 2024 figure is $6.4 billion. It will reach $8.44 billion on June 30th, 2025. The $2 billion increase in sold, not yet purchased or short positions is obvious. More crucially, 58.68% represented equity assets, which are susceptible to market risk like interest rate swings. If you paid attention, short sellers who took significant market positions lost a lot of money in April and May. We discussed this in February. We told Citadel and other firms that short sellers didn't normally do well in those circumstances. We also discussed Doug SFU's resignation as Virtue CEO and the rise in short positions. Consider Virtue's poor financial situation. They're doing awful. The CEO of this company resigned. By the way, their CEO or previous CEO strongly opposed shorting AMC. They had a significant short position in AMC since their short interests were expanding by over $2 billion. The CEO is leaving again and 58% of the money was in stocks. Undoubtedly, they're struggling. You know, they lie when they say we covered and are no longer shorting AMC. These short sellers repeat this often. But their sheets show increased short holdings. It's clear that their income is falling due to their problems. That's why we've been discussing these shorts' poor performance. After that, this is the most watchable stock for enjoyment and betting. I want to emphasize that few people do this because they want to and aren't biased. The view should be impartial. I attempt to keep my movies the same to find a theme. We discussed it, right? There are pros and cons. Talking about both perspectives is common. Thought. These articles usually try to make people think MC is a bad corporation.